Hi, I'm Josh Brown. Welcome to Live from the Compound. I'm here with, as usual, my partner, Michael Batnick, and we've got David Enrich today. David has written a book that everyone is talking about. You've probably seen him elsewhere. Dark Towers, this is it. There's so much in here. There's so much to get into. I won't spend a lot of time, but this is the true story of what's happening and what has happened at Deutsche Bank. Stick around. It's bananas. All right, David, first of all, thanks for coming. You're a 17-year business journalist. You've written books. You've been covering finance for a long time for Wall Street Journal. When you have an idea to do a book like this, is everyone there cool with it?
Well, I had just started the New York Times when I came up with this book idea, and they were cool with it, but not super happy. It was kind of grudging coolness because they knew it was going to take a lot of my time.
And how long have you been at the Times?
I've been at the Times for 2.5 years now.
Okay, and how long were you at Dow Jones?
I was at Dow Jones and the Journal for 15 years, give or take.
So that whole time you were somewhat aware of Deutsche Bank, kind of on the fringes of acceptable banking?
Yeah, I mean, I really started paying a lot of attention to the bank about 10 years ago when I moved to London for the Journal, and this is right after the financial crisis, and it was the kind of the onset of the European crisis, and Deutsche Bank was just this huge kind of thing hanging over everyone, and no one knew if it was strong or weak, and people were kind of terrified of it, and that's a great recipe for a journalist looking to dig into something.
So they've got an illustrious history, all the way back to financing the construction of Auschwitz. They lent money to countries like Iran and Syria recently. They helped Russians launder money. There were sexual harassment allegations. They bought a mortgage lender just before the crisis, wrote that down. All in on derivatives. The LIBOR crisis or scandal, which you wrote about in the Spider Network, and helped U.S. companies to avoid paying taxes, just to name a few.
But other than that, though,
other than that,
pretty good.
Yeah, we're not getting into the market manipulation, the bribery, the tax evasion, all that stuff.
So reading this book, so obviously Deutsche has been in the news. You've been covering them for years, but it's sort of been in the background. I haven't really read all the stories and stuff, but this was just truly eye-opening. And when you read books like this about Enron after the collapse, it's always after the collapse. This company is still very much alive. How is that possible?
Well, I'm not sure I agree with very much alive. This is a company that's been around for 150 years. As recently as a decade ago, it was kind of the toast of Wall Street, still having survived the financial crisis a lot better than most of its peers. Its stock is now, I haven't looked today, but as of yesterday, and it's rebounded a bunch in the past few months. Even with that, it's down 93% from its peak. So this is a company that has just a mass destruction of shareholder value over a relatively short period of time. It does still exist, though.
In 2007, it was the biggest bank in the world.
Yeah, it was the biggest bank in the world, and it had a huge market cap, which I don't know off the top of my head. But that was the peak.
Does the German government have anything to do with it?
Well, the German government has they haven't actually rescued the bank, but everyone knows they would rescue the bank if push comes to shove. And so there's a huge...
They don't control any aspect of it. It's just the subtext is Germany's not going to let Deutsche go under.
Yeah, I mean, even the bank's name speaks to how synonymous it is with German capitalism. And I think you talk about too big to fail and moral hazard. Deutsche Bank.
The poster child.
Yeah, especially in Europe and even more so in Germany.
But so it was contained to Europe, for the first, 90 years, whatever it was. And then you wrote a chapter about the Great Migration from Wall Street to London.
Right. And so and the thing about just purely serving clients and doing this kind of plain vanilla lending is that it's not that lucrative. And so in the late 80s, early 90s, all these big Wall Street firms were starting the process of converting from partnerships into publicly traded companies. They had super high shareholder returns. And so investors were not that interested in investing in plain vanilla banks like Deutsche Bank that had very low returns. And so Deutsche Bank needed to find a way very quickly to get a lot more profitable. And the best way to do that, especially at the time, was to get big into Wall Street and sales and trading, and in particular to get big in derivatives. And so that's what they did. They hired a guy named Edson Mitchell, who's a derivative salesman at Merrill Lynch. And he went on, I think, probably the greatest hiring spree in Wall Street history. And he, with a couple $1 billion provided by Deutsche Bank, hired thousands and thousands of people, most of them from Merrill Lynch, but from all over the street, really.
So I think we know that everything is driven by incentives all over the place, all over the world, not just finance. So Ackerman, who became the CEO, said the current quarter is the most important quarter we're ever going to have. And they were targeting these ridiculously high returns on equity. And so do you think that was like the center point for all of what came afterwards?
Yeah, I think Ackerman's decision in around 2002, 2003, he basically said the return on equity of the bank needs to go up sixfold. So I think it was like at 4%, and he wanted it at 25% within 2 or 3 years.
And they got there.
And they got there, but I think looking back on that, that is maybe the single worst decision in the history of the banking industry, certainly the history of Deutsche Bank.
It sets a reckless tone.
And it's extreme short-termism. It's reckless. It provides this perverse incentives to make money right now with little or no regard to what happens even 3 years down the line, much less a decade down the line. It leads, in this case led, to radical underinvestment and neglect for some of the core things at a bank. The technology, for example, they just did not invest in. Compliance, they did not invest in. Any sort of internal monitoring system to look at fraud or suspicious activity. It was just completely
But it takes
neglected.
a while before that blows up.
Yeah, it does. And in the moment, it looks great. I mean, they achieved the 25% return on equity. And that kept going up from there. They were getting, and look, the media and the industry in general completely missed the boat. And they were getting these Banker of the Year awards, best bank in Europe. The New York Times at one point called Joe Ackerman like the greatest banker of his generation or something to that effect. And it was a love fest because they were doing really, really well at serving what they regarded as their sole constituents.
But that's not so different, though, from Lehman, who was on the cover of Barron's, being celebrated a month before, a year before it ultimately filed for bankruptcy. Like, it's not wildly different. So where does Deutsche Bank go further than just that culture of we only care about this quarter? Like, when does it spiral into what it's become now?
Well, I mean, first of all, I think that comparing Deutsche Bank to Lehman Brothers that's pretty apt, and that's pretty bad. Right, I mean, Lehman is like held up as
the largest bankruptcy in history.
Yeah,
so,
exactly,
yeah.
And kind of, that is the textbook definition of finance gone wrong. And I think Deutsche Bank also fits that bill, with the difference being that Deutsche Bank miraculously survived. And I think that became the key turning point, is that in 2009, 2010, they actually had a relatively good crisis because they had made some what turned out to be smart bets anticipating the collapse of the housing market. They were also playing all sorts of accounting games.
They panicked first.
Yeah, they panicked first. They had a huge fire sale of assets that they rightly recognized were about to become even more toxic than they were. And they the prop traders made a huge short bet on against the U.S. housing market.
So Lippman was in The Big Short. He was in this book. So prop trade.
Who plays him in the movie?
Ryan Gosling. Well, it's Ryan Gosling. It's the Ryan Gosling character is based on Lippman.
Yeah.
So prop trading went from 5% of profits to 17%.
Yeah.
Their leverage ratio was like 50-1.
Yep.
What's Berkshire like? I don't know.
Not that. Like, I don't
2
know,
to
single
1?
digits for sure.
So this was. I mean,
and even the other banks, by the way. I mean, this was an era where leverage ratios, which are like a pretty pure test of the riskiness in the financial system, were exploding. But even the rest of Wall Street was in like the 20-1 range, maybe 30-1 range, which by historical standards is off the charts. Deutsche Bank was double that.
In terms of like where this was coming from and oversight and regulation and internal compliance, what systems and checks and balances do they have in place?
Very few. And to me, it's like, I think it's actually not that hard to understand how internally you've got this short-term pressure and incentive set up to just succeed by one metric only, which is return to shareholders in the short term. So it's not that surprising that they're not investing in like cost centers like compliance or tech. What to me is a little more surprising and I guess upsetting from a policy standpoint is that the regulators were just completely missing in action. And I think that partly reflected this attitude among regulators that you don't want to say anything too critical and too public about the banks because that could destabilize them. I think part of it is the anticipation of getting jobs in the industry, and in particular at Deutsche Bank, which was making huge paydays to former regulators who went and joined them. And so I think the incentives for regulators also were there's little upside to speaking out publicly against a big bank like Deutsche Bank, and there's plenty of downside. You could sacrifice your own livelihood.
Does the international nature of the company play a role in that? It's almost like regulatory arbitrage.
Yeah, that's exactly.
So it's being overseen by European authorities in some respects, but then U.S. regulators on the security side.
Yep.
It's like, who has the final say on what's going on at this
Yeah,
bank.
and Deutsche Bank played that perfectly. I mean, they were Deutsche Bank was, for all its ineptitude and recklessness, was extremely savvy at some stuff. And regulatory arbitrage is a perfect example of that. Not only were they and so in the U.S., for example, you've got the SEC, you've got the Fed, you have New York regulators.
Office of Thrift Supervision.
Yeah.
Like it goes on and on.
Well, but even just for Deutsche Bank, it was
Yeah.
the Fed, SEC, and New York. And then you've got in London, you had the Bank of England, you had the Financial Conduct Authority. And then, most importantly, in Germany, you had what's the regulator known as BaFin, which was in pure defense mode, trying to kind of circle the wagons around his hometown bank. And Deutsche Bank became very expert at when they would get a request for information or a subpoena from, say the SEC or the Justice Department in the U.S., they would insist that had to be routed through BaFin. And so it would just end, all requests for information were kind of being diverted into this labyrinth of German bureaucracy.
So this blew my mind. You referenced this, that the technology systems, the computer systems between Moscow and London and New York did not communicate with each other.
Yeah, and that it's hard to overstate the craziness of that. And literally, if they wanted to look up their exposure to a certain type of interest rate derivative in a certain market or a certain time period, they could get it for Moscow, or they could get it for London, or they could get it for the U.S. or Germany, but they couldn't get a net overall exposure. And
Is that deliberate? They build silos to keep people out of each other's business?
I mean, I think I don't think it was deliberate. I think it was just sloppiness and them being cheap and not integrating technology systems, especially by the point when they've got literally like 1,000 different technology systems trying to interact. Solving that is a huge multi-billion-dollar project. There's no easy way to do that. You have to start over. And that's who wants to be the executive a few rungs down from Joe Ackerman or Anshu Jain saying, guys, in this quarter, we're going to take a big charge because we're going to solve our technology problems. No one was set up.
Lose your job.
Yeah, you'd lose your job. And in Ackerman's case, I mean, he was not shy about publicly blaming people for failures, and that's you not only lose your job, but you lose your reputation.
So this was a dark book. There was a lot of, there were some accidental deaths.
Yep.
There was some suicides, and then there was obviously the whistleblower that you spent a lot of time with.
Yep.
Talk about how that process all worked.
Well, it's been really strange and very intense, actually. And Bill Broeksmit, who is a senior risk executive at Deutsche Bank over many years, he's one of the guys who had brought over from Merrill Lynch to Deutsche Bank in the mid-'90s, committed suicide in London in early 2014. And shortly after his death, I got to know his son, who got access to his father's. Bill Broeksmit had been using his Yahoo and Gmail accounts, oddly, for a lot of his work.
As
stuff.
is done.
Well, is that done? I don't know. Yeah, right. That struck me as very strange. But he had also is partly because he was on this oversight board that wasn't part of his full-time job. Anyway, his son Val, who had no experience in finance and is like he's a skilled rock and roll musician, got access to these files and had no idea what any of them meant. And so over a period of 6 years, and Val learned a lot on his own, but I also
He cold called you?
No, I cold called him right after his dad died because I had heard these rumors. There are a lot of rumors swirling about the circumstance of his father's death, and my colleagues and I at the Wall Street Journal in London had it's what you do as journalists sometimes, and it sucks. And I was the one who we kind of split up his family, and so I got Val. And it was very easy to track Val down, and because he had this big active social media presence. And so
he was like, yeah, let's talk?
No, I mean, it was a long, slow, rather difficult courtship. And I originally, I believe, contacted him 9 days after his dad's death.
That's tough.
Yeah, look, it's my job. It's obviously a horrible situation that I can't even imagine for him and his family. And the last thing you want is a bunch of journalists swarming. And some of my colleagues had rightly, but it sucks, had visited the house where they lived. And so Val, I think actually, to his credit, told me that if I would call off the rest of my colleagues and leave his family alone, he would talk to me. And that was a deal we were happy to make because we're not trying to bother people. And so Val is a complicated guy who was, during that period, in and out of rehab. And during that period, I started to get to know him just over the phone and over email. And by that summer, so 6 months, give or take, after his dad's death, he started sharing with me some of the more interesting files that his father had in his computer.
So we can't not talk about the Trump stuff in terms of lack of oversight at the bank itself. This blew my mind that he had defaulted several times with the investment bank, whether it was the casinos, the Chicago project. But then he was able to get a $40 million loan approved on the private wealth side.
Yeah, I mean, in this,
He had debt from one side of the bank that he could pay off with a loan from the other
it
side
was
of the
not
bank.
only debt but defaulted debt.
So
I mean,
Peter was paying Paul, but like they had the same debt.
right, and this
You couldn't do that anywhere else, right?
No, of course not. And that's this to me, like put aside the ideology of Trump or love him or
No,
hate
we're not
him.
even gonna go there.
Yeah, no, and I
Right.
don't want to because it's irrelevant. This is so instructive though in showing the dysfunction and just brazen recklessness inside this bank that they look, Trump by that point had defaulted on a huge junk bond offering that Deutsche Bank had underwritten. They had then lent him $640 million to build a skyscraper in Chicago. He then defaulted on that, and that's in 2008. And then 2 or 3 years later, they're back, a different arm of the bank, wing of the bank, is back to provide him a bunch of money to repay the money he still owed on the defaulted Chicago loan and to go buy the Doral Golf Resort in Florida. And the bank's argument, and I've talked to a lot of the people who were involved in that decision to make these loans at that point. There's a huge fight within the bank, and the investment banking side, which had been burned repeatedly by Trump, was like, you can't do this. This is humiliating for us. And the private banking division successfully argued that not only were these loans safe, that they were now preparing to make, but that the reason the investment banking side was opposed to it was just purely sour grapes, and they hate us, they're envious of our success, and they're trying to undermine us. And that appeal worked. And it to me, again, I've never seen such a clear illustration of organizational breakdown and just the perils of having these internal kind of fiefdoms that are literally at war with each other.
So not your job to answer this question, but is Deutsche Bank going to be around in 10 years?
Whew, I don't know. If you had asked me that 6 months ago, I would have said probably
what is
not.
the financial condition of Deutsche Bank right now?
It's improving very slowly. The bank is still.
What's like the debt? What's the debt level off the top of your head? Like,
I don't know.
is it way bigger than the equity still?
Yeah, banks in general are highly levered institutions. Yeah. Deutsche Bank is way over levered, so it's coming down. But to me, the biggest, and again, this comes back to some of the reporting I did last year for the book down in Florida. I went and talked to a bunch of the compliance staff, and this doesn't speak directly to the financial issues, but it is relevant because I talked to the people in the compliance division down in Jacksonville, Florida, and I talked to probably 20 of them, give or take, who had either currently worked there or recently had worked there. And every single one of them literally was like, we don't know why we're working here. We don't trust what the bank is telling us to do. They're setting us up to fail. And, that is a serious issue for a bank that's operating in a highly regulated market like the United States. And it really increases the odds that there's going to be another huge scandal of some sort somewhere down the road. And if that happens, it would not surprise me if the Fed or the United States government kicks Deutsche Bank out of the U.S. And that could
That's what I wanted to ask you. You know what's funny? If they ceased operations today, it wouldn't matter. There's nothing they do uniquely that other banks aren't already doing better than they are, probably at less costs, probably at less risk. Well, why does in other words, why does that even have to be here?
Oh, look, the argument they would make, which I think is somewhat self-serving but not entirely, is that there is an important role for big European banks to exist all over the world to serve big European companies that are looking to do business around the world. There are probably a bunch of small or mid-sized German companies that need financing in the United States or need to do dollar-denominated
Those exist, though. There's HSBC. There are big international banks.
Yeah, that's true. But I think the German argument would be that it's the largest economy in Europe, and there's a huge sector of kind of mid-sized German companies that increasingly rely on have globalized supply chains and global customer bases, and it's helpful to have a German bank. That being said, you're right. Like if Deutsche Bank ceased to exist tomorrow, there's Commerzbank in Germany, which also could fill some of that void. And surely, if there was a demand for the services that Deutsche Bank provides, other players would come in and provide that.
I'm guessing they don't get kicked out under a Trump administration, and maybe in term 2 of a Trump. I'm guessing that doesn't happen anytime soon.
It's hard to imagine the Trump administration doing something very bad to Deutsche Bank.
Right. Okay. Well, listen. The book is crazy. Like I can't believe how many things have gone on that people don't even realize. And I think there's a lot of takeaways for investors, for people that keep money at banks. So I think it's really great. What's your next topic that you're you're keen to raise a ruckus over when this.
Oh my god, I don't have any idea. I'm trying to just like
Maybe write a children's book. Why don't you calm down a little bit?
yeah, that's right. Calming down sounds great.
Free advice. I'm an
you.
advisor. All right, David, thank you so much. We're going to link to your book where people can buy it
you.
on Amazon. Where do you want people to read your stuff? Like, do you have a permalink to your column at the Times, or
No, just Google
Twitter?
my name, Twitter. You can find me.
All right, and you promise you weren't followed here.
I cannot. I make no promises, actually.
Hey, what do you think of David's book? If you haven't read it yet, this is like a thriller, but it's a true story. You should totally read it. Go ahead and leave us a comment. What are your thoughts? Keep it apolitical. Go ahead and subscribe to the channel if you have not already, and we will be back with you soon, I hope.